Make sure you guys get your 5 stocks from Moomoo. Link down below. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Link down below. Literally free money. And with that being said, let's talk about the carnage, the red, the bloodbath that we saw in the stock market today. And we have to break down stocks, earnings, what I'm looking to do. So hit the like button, subscribe. Let me know your thoughts down below in the comments. And now let's get into it. So the S&P 500 today closed down 2.1%. We had the Russell down 2.5%. The NASDAQ went down almost 3%. And we had the Dow down 1.8% as the VIX went up over 15%. And we had gold close over 1,900 an ounce, up 1.5% on the day. And silver up about 1%. And look at this 5-day, 5-minute chart tells it all, guys. We are slipping, and we are slipping very fast. We took out the lows from yesterday and the day before, and now it looks like we're going to test the lows. This might have been from Friday, or was this on Monday? Either way, it looks like we're going down to 435. And if I pull back a bit here on the maybe 4-hour chart on SPY, let's take a look. Maybe actually the 20-day chart. Let's go back to it. Look at this, guys. If we break 435, we are going straight down to those lows, most likely from the beginning of, actually, that was the end of January, just about a month ago. And those lows are right around 425 on SPY. So set your alerts, 435. Seriously. I'm going to do one at mark is at or below. Let's do that together. 435. If that point breaks, we're probably filling the gap down to 425. And at that point, excuse me, guys, my voice is a little messed up right now. I don't know what's going on, but bear with me. At that point, if we break 425, now we're talking lows during this whole sell-off, correction, whatever you want to call it, and those are right about 420. If you guys take a look on this 4-hour chart, we haven't gone much under 420. We haven't gone under 420 during this whole sell-off that started in the beginning of 2022. So that's a little breakdown. 435 breaks, I'm telling you, this thing's going to be slipping. And when it comes to triple Q, let's take a look on the 20-day chart for this one. This already broke under 350. I was talking about that in the morning video today. We broke 350. Now we're going down probably to 342. We're trading at 345 now, and 342 was the low point from 3 days ago. And if that point breaks, we're talking we might take the lows out. Or at least test the lows from the end of January, which are the lows for this whole correction, and those are about at $334 per share. And if that breaks, I mean, look, the downside, it might start getting ugly from there, guys. If 334 breaks, the next point we might be going to, if I draw this out, 315, 320. I don't want to sound like what's it called here? A perma bear or something. I'm just breaking down exactly what I'm seeing, and that's what I'm seeing. And I'm also noticing now that I'm looking at it, a head and shoulders on triple Q here. Look at that. Head and shoulders on triple Q, left shoulder. We got the head right here. We got the right shoulder. It's not the perfect looking head and shoulders, but that's what could be playing out right now. So what do you think? And let me look. Are we seeing a SPY head and shoulders too? Yeah, we kind of are. So that is what we're seeing. It's playing out. We could be going lower, guys. Keep that in mind. I'm not trying to be a doom and gloomer. That's not what this channel is about. You know that. The people that have been following me for a while, I'm not a doom and gloomer, but I'm just being realistic. I'm showing you all what I'm seeing and what I think. So let me know your thoughts down below in the comments. Hit the like button, subscribe, do all that good stuff, and let's talk about some earnings reports. We had Roku today, and let me get some water, guys. Hold up. We had Roku report, and I actually didn't look at the report yet, so let's take a look at it together. Holy crap. The stock went down 10% on the day. I saw that earlier, but now it's down another $16 after hours. That is not good. It looks like it's down another 10+%. Let's take a look here. Yeah, it's down another 12% after market hours. So Roku's getting completely obliterated. It looks like it wants to go under $100, guys. And now from the 490 all-time high to where it is after hours at 128, it is down almost 75%. That is unbelievable. I don't think I've ever been in a stock, unless it's just been a pure penny stock gamble, Literally, I don't think I've ever been in a stock where I've gone down 75%. And if you bought it on that day, somebody did buy it at 490, guys. It got to 490. If they're still holding, they are down 75%. That is depression level status for Roku stock. So let's see what they reported. They did EPS of 17 cents versus 7 cents estimated, so they beat EPS. What did their revenue do? 720, or that's their guidance actually for the next quarter, 720 million versus 756 million. So their guidance is a lot lower than the estimate for next quarter. That's most likely why it's dropping like a brick after market hours. And what did they do for revenue for the previous quarter? Looks like they did Q4 revenue. Wait a second. Is that right? Wait a second. They did Q4 revenue of 2.76 billion. Oh no, that's wrong. They see that for full year, or that's their full year 21 sales, roughly 2.76 billion. Okay, that makes sense. And I'm not seeing what they did for this quarter. I don't know why. Where the heck is it? Are they hiding it? I mean, did they not give that number out? They had to have. Where is it? Either way, guys, they beat EPS, and the reason why the stock's tanking is the guidance. I say all the time, guidance is super important. It's not underrated. I mean, everybody knows that, but it's something that you have to really be looking for. You know, guidance for the next quarter, for the next full year. If those two metrics or numbers, whatever, if they're good, above the estimates, it's a good chance the stock's going to be trending up. And now this stock, Roku, got more bad news on top of the beating that it took, and it's going down even more. And that goes to show, just because a stock is dipping doesn't mean it's a good buy. It could always dip even further. It could go even further. It could go even further. Now, if you believe in Roku, go ahead, buy it. I don't believe in Roku, so I'm not buying it. In fact, I bought some Shopify today, which I made a video earlier. That's what I am buying. I'm buying some Facebook and PayPal as well, and Google, because those are 4 tech companies that I believe in long term. That's just the bottom line. Roku, I don't believe in it. It's dipping. If it goes even lower, it could go even lower, and who knows? Maybe this drops. Maybe the bottom falls out. Who the heck knows? But as of now, Roku is not looking good. And again, I don't want to sound like a perma bear, some kind of crazy lunatic gold bug or whatever. Even though I like gold, I'm not a gold bug. You know, I don't want to sound like that, but I'm just being realistic with what I'm seeing. Shake Shack. I told you guys the other day, I really like my Shake Shack. You know, if I have to go out and have a cheat meal or a crazy meal, you know, I'd go to Shake Shack and crush maybe a burger, maybe 2 burgers, and some fries. And I'm loving it. No shade to McDonald's there. But they reported earnings. They went down 4.5% during the day. So they closed at $75. Now they're down to $67 after hours. So they're down another $8 on top of the $3 that they went down intraday. So let's see what they're reporting, or what they reported. They did adjusted EPS of negative 11 cents versus negative 17 cents. So that beat the estimate. Sales came in at 203.3 million versus 202.67 million. That missed the estimate. Actually, no, that beat as well. I'm reading my numbers wrong today, guys. So double beat for Shake Shack. It has to be the guidance. Yep, there it is. Guidance, guys. What did I say? Q1 sales. They see Q1 sales of $196 to $201 million versus the $210 million estimate. So guidance is under the estimate. That's not good. And let's see if they gave us full year guidance. They didn't. They see, though, 45 to 50 domestic co-operated Shacks, Shake Shack locations opening in 2022. That's nice. I'm assuming they're not closing many. You know, what I like to look at is how many are they opening, how many are they closing in terms of Shake Shack, you know, Chipotle, the restaurants of the world, retail chains. As long as they're opening more, and, you know, they're operating them all efficiently, that's good. So that's a good sign. 45 to 50 domestic openings in 2022. So, yeah, it's the sales guidance, guys. Goes back to what I said. Sales guidance looks weak, and this could very well be a problem in terms of the entire economy. You know, a lot of people are not spending as much right now. We have a lot of inflation. The dollar's not going as far. The middle class is not able to spend as much. Shake Shack is suffering. That's probably a major reason. Major reason. So let's talk about the next one. Dropbox, DBX. They also reported this stock went down 5.3% in the middle or during the day, 5.3% down. And now it's down another 30 cents after market hours. So let's see what they did. They did 41 cents EPS versus 37 estimated. They beat EPS 565.5 million in sales versus 558.16 million. So double beat for Dropbox. I'm not seeing anything when it comes to guidance for Dropbox. So it's really unchanged. It's down 20 cents. That's nothing for a $23 stock. And it actually shot up initially. It went up to almost $26. Now it's at 23. So it's very volatile after market hours. We have about a 10% range of where it's trading. That's very volatile. So we'll see if this one starts guiding or not, or if they give guidance in the earnings call, and maybe the price action starts trending up during the earnings call. That's a lot. We see that a lot with stocks. They run up initially when the numbers come out, and then when the earnings call starts an hour later or whatever, they typically are volatile during that period as well. So Dropbox, by the looks of it, same with Shake Shack, guys. Both of these are under moving averages, guys, on the 4-hour chart. That's not good. We were trying to break out. Dropbox was trying to break out, but it failed. Now it's back under the moving averages. So for that reason, I'm not touching Dropbox or Shake Shack in the short term. Maybe Shake Shack I got to look at more from a long-term investing perspective. This chart does not look nice to trade. Maybe if it gets bludgeoned down to the low 50s, mid-50s, maybe it has a bounce-back play from there as a trade, but I might be looking at this more as an investment. And we have some earnings coming up tomorrow. You guys know I'm a DraftKings shareholder. We have that company reporting in the morning. Let's pop this chart up. DraftKings went down 4% today, and this is a more speculative position for me, right? Most of my money at the end of the day, guys, is in blue chip stocks. It's in long-term ETFs, whatever. VOO is one I own. VXUS is one I own. VOT, IJR. Those are some ETFs I own. And a lot of blue chip stocks and growth stocks. And I own some speculative stocks. DraftKings is in that basket. And this is one that I'm down on, admittedly. I think my average is like 35 or something. I am down on it. But I'm holding on. I'm holding on. I'm riding with it. We have earnings tomorrow morning. And this is another one that's been downtrending. It's been under these moving averages for a good 5-6 months. It's been in that group of stocks that's gotten beaten down with inflation coming up, interest rates coming up, quantitative tightening occurring. Tightening, I mean, they're not really... You know what I mean, guys. The Fed doing what the Fed does, right? All that stuff is going down right now. That's hurting stocks like DraftKings, Shopify, which we talked about earlier, and I actually bought Shopify today, like I mentioned. DraftKings, we're watching it in the morning. It's gonna be a good one. John Deere's another one. Deere and Company here. It's down today. It went down 2.5%. And this chart I can actually get behind. This chart looks really good. Look at it. We just hit $3.99 a couple of days ago. Now we're pulling back, heading into earnings. Like I said today, the stock went down 2.6%. If we get buying pressure between $3.70, $3.75 on a good earnings report, this could easily be a nice, continuation play, a nice bounce play. And this is actually, I guess it's considered more of a value stock now that it's clearly been running these past couple of months as these growth stocks have been slaughtered. So let me pull up some statistics on DE right here. Their P ratio is a 20. That's gone up a lot recently as the stock has been going up as well. And they pay a dividend. Let's see here, 1% dividend, not too bad. And yeah, I mean, look, they're a profitable company. That's what people have been going into for the most part. That's why you've seen the growth stocks get slaughtered. Deere and Company is benefiting from that, right? So those are stocks I'm looking at right now, ladies and gentlemen. And really, my entire watch list today was a bloodbath. Only 2 green stocks. One of them is the Trump SPAC, which... who the heck knows what's going to go on with that? It's DWAC, that's one. And we had a silver stock, AG, First Majestic Silver. That went up 2% on the day. Other than that, we had Palantir down 15%, Voyager down 8%, Coinbase 7%, SoFi 7%. these stocks got bludgeoned. I mean, Google went down almost 4%, and you guys know Google, I'm buying a lot of Google. I've been buying this thing up for the past year, and now that they're doing a split, I want to buy even more Google, and I actually really hope Google keeps going down. Please go down. Please keep going down. If Google goes down 2,500, 2,400, 2,300, 2,200, that's going to be a blessing for me at least, maybe for you guys as well, because my goal is to accumulate as many shares before this split. And could you imagine if Google went down, 30% heading into that split? I think there's going to be hype around this stock when it splits, and that's a gamble. That's not why I'm buying it. This is a long-term investment. I'm not selling this for years, guys, but I think in the short term, there's going to be some hype around it. Once we get towards that split in July, I'm pretty sure it's July. So, yeah, guys, that's pretty much it. Those are some stocks I'm looking at, some thoughts on the market, some points that you got to look at when it comes to SPY and Triple Q. And the volatility index, I don't even think I mentioned it. VIX went up 15% today, so watch out for that. We might be going back over 30 on the VIX here in the short term. So let me know your thoughts down below in the comments. Hit the like button, subscribe. Make sure to join my Patreon if you guys want all my real-time buys, sells, call-outs, morning update videos every day exclusive to the Patreon members. That is linked down below. And you guys could also get some free money from Moomoo. Use my link, deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your money, link down below. I'll catch you guys in the next video. Peace out.